Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 3:30 in New York. It is Thursday, December 21st, 2016, and this is the Daily Report for Gold and Silver. As we go into the close, COMEX futures, of course, has really slowed down or stopped trading for the morning session. Globex will kick in. And of course, spot market is still trading. Currently 11.01, putting it off about $5.20 on the day. However, when we look at the spot market, we're looking at about 1100, same price point, but as you can see, showing unchanged on the day. And in terms of the range, we've seen it trade to a high of 1104 and a low of 1092, so not very much of a range, about $12 on the day. But I do believe what we are looking at is a potential pivot point in the market and a pivotal turning point. It's really based on a couple of factors that we're looking at, and that is sensitivity to current global economic scenarios, as well as oil pricing. We'll talk about all of that on today's Daily Report. So traders, the first chart that I do want to look at today, it's a simple line chart. It is off of daily closes, and in there I've put what is simply called a linear regression, or more commonly a bear channel, because obviously we have had this market with an extreme bias to the downside for the last couple of years. And so what we want to do is absolutely take a look where current price is falling within the channel in which it's trading, this being our midpoint right here. When we do that, we can see that the market on a couple of occasions has attempted to break above that. On a couple of occasions is definitely broken below, but we're sensitive really to the last couple of years, this being 2014 here, 2015 here. So if we just consider maybe the last year and a half, which takes us roughly July, we have seen that it is maintained within this channel for over a year and a half. As I said, we have exceeded it on 2 occasions. We've tested it on another 2 occasions unsuccessfully, with it faltering just before it reached the upper levels of this trading band, so to speak. And now it appears as though we are very, very close to hitting this trading band. Now, that being said, I can't look at a real bullish scenario unless we break above that and maintain above that. Now, we've seen that happen both above and below, but for the better part of the last year and a half, this channel has really held as a downward bias. And for that to change, we would have to have an extended breakout. We would have to go into, of course, a new channel. So traders, the next chart that I do want to look at today is a 720-minute chart, so 2 candles per day. And I really want to take a look at the range that we have seen this market trade in from the beginning of the year. Of course, 2016 begins right here, and it also begins on the really low that we achieved on a closing basis. We'll look at a closing basis, but on a closing basis, the lowest this market is traded to is roughly 1061. On a closing basis, the highest that it is traded to is roughly 1109. So within the first month of trading, and we're about, 3/4 of the way through that, what we can say is that we've had a fairly dynamic range, not quite $100. And within that range, we are absolutely now at the upper levels of that range. And so a break above that would be a very, very strong signal. And then the reciprocal, of course, would be moving to this price point, roughly 11.9, 11.10 in that area, and bouncing back off would be an indication that we're probably staying within this defined range, at least for the time being. So the key level that we really want to watch right now has to be 1110. Of course, the market is just flirting with 1100. That's our second real level that we want to watch, whether or not the market can show any kind of sustained close over 1100. So traders, lastly, in terms of charts that I do want to look at today is a shorter term, this one being a 480-minute candlestick chart, 2 moving averages in there, short term, 13 cycles, 50 cycles. We can see that we are currently trading above both of those cycles. The other thing that we can see is that As this market came up, this is where it hit those highs at around 1109 a few days ago. Yesterday, this is where the market sold off and traded to an intraday low of about 1092, 1093 in that area. We can also see that we matched that low. This is today's session, and we are closing up we are nearer to the highs than we are to the lows, obviously, trading unchanged, in essence, at 1100. And of course, when we take into consideration that we do have a rally in the equities markets, first of all. Second of all, we have oil, which has really decided to move back up today. Take a quick look at it, up about 5% on the day, or $1.32 per barrel, just hovering below $30 per barrel. Now, there's no question, no doubt, we have been inactive in this market as we've entered this first trading year, but I do believe there's going to be a lot of opportunity, but right now there's a lot of uncertainty, and that uncertainty has not translated into a defined trend other than the fact that we see oil under pressure, and as we just looked at gold trading within a $60, $80 range over the last, call it 3-4 weeks, or at least since the beginning of the year. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.